Hey, welcome back. I just want to dedicate this short episode around the approval that we've seen on the Ethereum spot ETFs in the United States, because I'm getting the perception that there might be some confusion or even talks of fear about how this, could potentially contaminate the existing Bitcoin spot ETFs out there. Now, I just want to relay this. This is not a fear, right? I see this, as an opportunity yet again to legitimize some, rather interesting cryptocurrency. So I pretty much see Ethereum and Bitcoin completely separate. They're entirely different from one another. They have two different use case propositions. Just a reminder of what those are. Bitcoin, as we know, is the digital gold, is that global monetary financial asset that is completely, it's hard, it's scarce, it's only 21 million Bitcoins. And it pretty much serves, as a store of value ultimately, which is, as a Bitcoin holder myself, to generate that intergenerational wealth ambition that I have in life. Not as a medium exchange, even though people may use it as a medium exchange, to transact on their daily lives, whether it's goods and services. I pretty much see Bitcoin ultimately as a store of value. Ethereum, on the other hand, is completely different. It's more of a utility. It's more of a technological crypto. It's pretty much around smart contracts on the blockchain, on Ethereum blockchain. So it's completely technologically focused on that type of community, developers predominantly, and fintech startups that are, getting into the habit of creating smart contracts, and particularly given the new wave of use case value propositions around blockchain technology. Real world assets tokenization is being the next one. There's also DeFi, decentralized finance. That has been the first use case for blockchain technology, of which Ethereum and the smart contracts have been paving the way in the industry. And then we've got this real world assets tokenization, which is the next wave use case for the smart contracts blockchains out there, whether it's Ethereum, Solana. So I see this as a great news. I think it's good news, and we should certainly not be fearful that the advent of the approval of these Ethereum spot ETFs would contaminate the Bitcoin spot ETFs that are out there. No, not at all. So there are two different use cases. We should treat these two as legitimate. Bitcoin is monetary, financial. Ethereum spot ETF is smart contracts, technologically focused. They're two different kind of use cases intended for two different type of audiences out there. So I just want to clarify this in this video, because I just want to avoid people selling off or shortening their positions, whether it's in Bitcoin now into Ethereum, and then likewise Ethereum to Bitcoin. No, it's completely different and should be held separately. And certainly I'm a believer of medium to long term holding of these type of positions. Not something that you should speculate. It's not like any old dinky old commodity or stock option out there. It's very, very innovative, highly innovative value propositions that they provide, and should be treated responsibly and managed responsibly, certainly into the long term, because there's going to be a huge opportunity, particularly around the smart contracts, when it comes to creating those new decentralized applications on the blockchain technology, as I said, now underpinned by this real world assets tokenization. So assetizing things like, real estate, property out there, arts and collectibles, under the notion of fractional ownership of these assets. So, it's huge potential, and please treat Ethereum, as with Bitcoin, as a long-term holding investment into the future. So hopefully this short video has given you that clarification. So until next time.